Rate rise has been predicted to increase this year due to high number in inflation. So it is imminent. So it's a matter of when it will happen. Although the variable rate is still relatively quite low, the fixed rate has increased from about 1.89 to 3.5. So how do you ease the pain during the rate rise? Let's find that out, but first, coffee. So the answer to this is very simple. So you need to do the horrendous task of budgeting. I know this sounds cliche, but once you start, a lot of the feedback that we receive is a lot of people are surprised with the amount of shit that they have spent. So identify your income. So sit down and start recording your income. If you don't have a regular amount of income coming in, work out the average. Next is to identify what are your expenses. Work out how much you've been spending on your fixed expenses such as your rent and utilities, your debt expenses such as your credit card and mortgage. And lastly is your entertainment or discretionary expenses such as going out or ordering an Uber Eats. So once you worked out your expenses, you can always review it. So for your debt expenses, for example, call your local mortgage broker and find out if there's any cheaper interest rate for your home loan. Credit card, do a balance transfer to get a lower interest rate. And with your discretionary expenses, what some of the little things that you can cut down? For example, instead of ordering Uber Eats 5 times a week, why don't we order it 2 to 3 times and start cooking more at home? Lastly is to set your spending limit and set yourself a saving goals. So your goal is to have a minimum of 3 months of savings for buffer. I hope that makes sense, and I wish you all the best on your budgeting, and I hope to see you again next time.